The markets are waking up as the altcoins are moving upwards. However, we still have an altcoin portfolio that is heavily underwater. That's why in this update we discuss adding funds into the portfolio. In this update we're going to talk about adding funds into the portfolio, but of course we're not going to be doing it because we want to be as transparent as possible. However, people have been asking me, hey, the markets are down so much. Is it a good period to be adding funds if you have the opportunity to do so? So that's why I created a poll on X where people were saying, hey, you should be adding funds into the portfolio. And some people were saying, well, you shouldn't be adding funds into the portfolio, but at least explain how we should be doing it. So that's what we're going to be doing. And if you really like the content and if you're part of the entire altcoin portfolio, make sure to subscribe to the channel beneath here, or at least like this video. About 40% of the people that are watching are not subscribed to the channel. So that's what we're going to do. First things first, we need to talk about the markets in general. The altcoins are doing great, and that is primarily because Ethereum has started to show momentum as it is up a lot against Bitcoin. And as a result, we are seeing some slight, and I say minimal upwards movements on the markets, as all those altcoins are finally getting back towards their highs of earlier this year. And then I say in May, we also started waking up with the market. So for instance, all those altcoins have been starting to rally to that point, which then becomes a reference for people to be selling their positions if they have been buying the previous period. So that's why we reject at all those crucial levels. Optimism has been doing that, the highest level since May. And as you can see next to me, Wormhole has been doing that as well, in which it marks a crucial resistance point where people are looking to be selling. And what we need to do right now is to create a higher low, or at least some buying pressure, because then we can start attacking the resistance again and can start breaking out of that construction that we're currently in, and that's when the real move starts to kick in. So in that regard, we have to discuss the ability to be looking at potential add-ons in the portfolio. Most of the coins, we started them buying significantly higher. I've provided an example of where we started buying Optimism, which was above $2, actually at $2.20, which means it's still down around 70%. Our portfolio is down around 40 to 50%. So if Optimism goes back towards the number where we were actually buying it for the first time, our portfolio is going to be up around 50%. So let's say we started with 110K, it's currently around 60. If it goes back to the numbers that we started, it's a triple from here for Optimism, which means that the portfolio is going to be at least 180K. So then finally it starts to show that we have been making money during the actual downtrend. So that is a good sign, but therefore if something is down so much, it provides a great opportunity to be adding funds into it. And that entire concept is what we refer to as dollar cost averaging. Dollar cost averaging is actually continuing to buy on lower valuations. That's one way where you can lower your average cost of buying the actual asset. That is one. The second is basically time-based buy-ins, or like averaging in, which is if you're looking for selling a little bit of your salary through buying Bitcoin, then you can do that on a monthly basis and just buying like $100 in Bitcoin every month, which creates a nice average buy-in for Bitcoin. And overall, if you look at the previous like 8 to 10 years, it would have been yielding you a massive return. That is the second way. And in my opinion, if we are having the altcoin portfolio, technically there are three ways of how we can be doing this. In the sense that we have been technically doing this already, as we had Omni that has been going down, up substantially. We had this wick going all the way towards $5.50, a rally of 300%, and we were able to capture some profits at $4.40, which then we rotated into other assets, which were down substantially. And then we are technically buying that asset at a lower valuation through which we dollar cost average down on that particular asset. So let's get to the portfolio and discuss the 3 ways of how you can be adding funds into the portfolio. And the first straightforward example is the one that I'm going to discuss right now, which is, let's assume you have the portfolio of 110K. If you have that, it's currently worth around 60K, as we can see on the screen here. Now, let's assume you want to add $10,000 into the portfolio. Then the most easy way of going for an add-on is to use the percentages of the allocations in the portfolio right now. So what I've done here is you can see all the coins that we have. You can see the current price of the coins. It's down a little since this moment, but it doesn't really change the entire topic. You can see the current valuations, and you can see the current percentages of the allocation of the asset. And that's the important part, where if you want to add, you can just basically go through this particular percentage-based allocations in the portfolio, and you can say, okay, I've got 10K to add. That's 100% of the entire add-on. I would like to add at least 20.07% into Optimism, which is around 2K, and it doesn't really matter at which valuation you should be buying it. And that's actually a key point. If you're looking to time the actual low, then you're speculating on market movements in the short term, which do not make sense. So I would just advise just buy at current valuations, because in the end, if it triples or goes 4x, it doesn't really matter that much if you were buying at 70 cents or 65 cents. So that is the most easy way of doing it. In that way, you don't need to make it difficult for yourself. You can continue to compound the returns overall, because I still believe it's a great period to be adding it into the portfolio. And then there are 2 more ways that you can be doing it instead of simply adding it towards the portfolio, which I'll be discussing next. We just discussed the most aggressive way of adding into the portfolio, because why I say aggressive is the fact that the portfolio in itself is just based on smaller coins. I think most of those coins are outside of the top 30, which means that I want to generate a yield on a portfolio that is extensively higher than what Bitcoin is doing. And yes, at this point in time, I'm still down a lot, which is part of the cycle, which is part of what we're doing. I keep repeating that if you want to have 1,000% return, you need to be aware of the fact that your portfolio can go down by 70 or 80%. So the first way of adding funds is the simple way, but also the most aggressive way. And that's why the next 2 examples of adding funds is basically just through making it less risky for yourself. So the second one is, if we go back to the portfolio, then you know that we have 4 bigger ones, 5 smaller ones, right? So the bigger altcoins are Optimism, Tau, Celestia, and Sai, which generally have a bigger allocation combined. And then we have the 5 smaller coins, which are Omni, Rocket Pool, Renzo, Aevo, and Wormhole. Generally, if we look at market momentum and market sentiment, Bitcoin goes first, Ethereum goes next, bigger coins follow. That's just how the money flow goes. That's how the risk curve goes. Same with Solana. Solana moved first, and the bigger meme coins started to go up, and then the shittiest ones started to go after that. You could play around a little bit with this entire thesis, which means that if you are very active in the markets, you could also say, if I want to add funds into the portfolio and want to be less risky, I just add towards the bigger coins before I'm going to add to the smaller coins. So I want to see more proof of adding momentum or sentiment or return to the portfolio. And in that sense, you could say, well, I've got 4 bigger coins here, which I think are going to do well. And in the coming few weeks, we're going to release a new episode in the podcast with the head of product of Optimism, which I would definitely advise you to watch. Regardless, adding it towards the bigger ones makes a lot of sense if you are aware of the fact that you need to compound or rotate afterwards to the smaller ones, because then you can add return to your portfolio. So in that way, you could say, I would like to add equally to the 4. You could also do the percentages based on the 4 in total. So the allocation is $36,683 for the bigger ones. 12K is into Optimism, which means that around 1/3 is going to be added towards Optimism. That is the second less risky way of adding it into the portfolio. The third one is to just add to the markets without adding it to the portfolio. You could also make a thesis of the fact that this portfolio in itself is super, super risky. And if you don't really feel comfortable, but you would like to add to the markets, you could simply say, hey, I'm just going to buy some Bitcoin and some ETH to already stack that portfolio, making sure that I don't really fall into the trap of losing all my money if I think that that might be possible to happen. So in that sense, I've got it here. Coins like Bitcoin and ETH, but also Aave, are less risky, but can still yield you with a substantial return, as Aave versus Bitcoin is just about to break out from the resistance, and it has proven to continue to grow in this entire DeFi space or momentum that we have. And as you can see on the chart, Aave versus Bitcoin is currently facing a crucial resistance and doesn't really have that downwards risk that we see on all the coins that we have. So all in all, those are 3 ways of navigating it into your portfolio, where the most aggressive one is taking it entirely into the portfolio that we have, including the smaller coins. The second one is just using it for the bigger coins. And the third one is just using it for coins outside of the portfolio, where you go off the risk curve, but still have an allocation into the markets. And of course, it's fully up to yourself which one you prefer, which one you would like to do. But I generally wanted to give you some insights in how you can be adding funds into the portfolio. The action on the track is heating up, and now it's your chance to be part of the action. OKEx is the primary partner of the McLaren F1 team and is giving away official McLaren F1 team caps to new users, and there's more. You also have the chance to win one of the 3 VIP experiences in Zandvoort in full papaya style. And now this is what you need to do. You need to sign up to OKEx using the link in the description beneath. You need to create an account. You need to make your first crypto trade, and then you will receive one of those caps at your home. And if you already have an account, if you refer a friend, you will also get one of those caps. These caps won't last forever, and the VIP experience won't last forever either. So you need to sign up before the 8th of August to be part of the entire challenge and to be part of this giveaway. It's a once in a lifetime, so make sure to join through the link in the description beneath, and perhaps we'll see each other in Zandvoort. It's a great period to be adding funds into the portfolio, as we are getting into the perfect storm of the next breakout of the market. And that is great if you have the ability to add to your portfolio. Muy grande. It's not for everyone. And as I said at the beginning, I want to be as transparent as possible, that it's not for me to be adding into the portfolio, given the fact that not everyone can do the exact same. And if not everyone can do the exact same, I shouldn't be doing it, because I want to see and I want to show how it is to have an altcoin portfolio and to be trading it through the cycle. So overall, the period to be holding your portfolios and seeing it go down is usually substantially longer than when the markets are going to reverse. And we've seen that with Ethereum. It's just 2 weeks and it went up by 50%. And during that upwards run, you really want to get into the position if you don't have any position. And then you start questioning, hey, can we have at least some sort of correction so I'll be able to be buying into that actual asset, which then doesn't come. So that's why I would like to be into positions earlier, to be making sure that I'm allocated already. So if you want to add funds into the portfolio, I would advise to take any of the 3 routes. Nothing is wrong. At least if you're not adding leverage to your portfolio, nothing is wrong. And if you have enjoyed the content in this update, make sure to subscribe to the channel and make sure to hit that like button. I'll see you again on the next one. Ciao.